In the metals quadrant, taking a look at the December gold contract, down over 1.6% on the close today. That was pretty much close to the low, at least. 1767.10 was the low. That was down 1.71%. On the high today, we were 20 cents lower than yesterday's settlement. 1797.70 was the high. 1797.90 was yesterday's settlement. So we'll call this a gap down day and the worst session for gold futures since September 16th. A strong week almost reverted back to unchanged, but ended up higher by a little bit more than 0.5%. Yields bounced, and that's part of the reason, the inverse relationship historically and lately that we've seen between U.S. Treasury yields and gold pushed the price of gold lower. Treasury yields in the U.S. dropped anywhere from 4 to 6 basis points across the curve today with only a slight steepening. So that steepening also negative for gold as it shows a little bit more of an economic recovery. But again, as yields rise, you're getting more yield. Gold has no yield. And also as yields rise, you're getting a little bit more of an inflation headwind, which means people who are looking at gold for an inflation hedge may not need as much gold. So that was most of the pressure, but also there's seasonality involved. I always say this when I talk about seasonality. It is not a trading strategy, but this is a weak time of the month of October for gold. So usually get a little bit of a sell-off in toward the end of the month before the middle of November starts a nice, strong seasonal trend that goes into the holiday season. But overall today, down day for gold, worst day since September 16th.